question in regards to motivations to sell. That's one of the first questions I ask why you're selling, right? And you want to get an answer that convinces you. You don't want them just getting a valuation from you and then, just for their own edification. You want them to be motivated to sell. Now, I've got one right now that I'm curious about because they seem motivated, but they're younger and the company is kicking off quite a bit of profit. It's a service HVAC company. And the reason they give is because they can't pay their taxes, their tax debt. They've got state taxes and income taxes, and they can't pay them. Well, they've got employment taxes they got behind on for their employees. So I questioned them, what the taxes are and how much they are, and they do have quite a few taxes. And their house payment, they work out of their house, and it's $1 million house, and they bought it through the profits of the company. And politically, they want to get out of the state of Washington and move to Texas. There's just a whole host of things going on with them. But they want to be bailed out. That's their thing. I don't like that motivation, really. But I'm guessing it's a real motivation. Obviously, they're under pressure. They don't have the cash flow to pay the tax man when he cometh. And they got to sell their house because their house payment's $5,000 a month. They've got other big expenses that they shouldn't have. Big cars, big Cadillacs, and all that kind of thing. I talked to the seller yesterday, and I said she was supposed to get back to me, and she said, I apologize. My 2021 Cadillac died on the freeway, I-5. It wouldn't move. I was tied up all day because we couldn't figure out how to tow it even. Those kind of problems, first world problems. But I just wonder, what your take is on that kind of issue.
Well, I think the business will probably have a valuation problem if it's not cash flowing sufficiently to pay the payroll taxes and the income taxes. Then there's a different issue there. It's clearly being mismanaged, right? So they're taking cash that doesn't belong to them, which is criminal. They need a criminal attorney, depending on what that debt is at this point, a criminal defense attorney, because I've had that situation before. I wanted to refer, I had a client that had set up a separate corporation to have all the payroll go through that corporate, or all of the employees worked for that corporation. It was like and then they leased the employees to the primary corporation. And they had, I don't know, they were collecting, deducting payroll taxes and all of that from these employees, but they only were remitting maybe half of it to the state and the federal government. And I think they had $2 or $3 million in payroll taxes that they were in debt. And I talked to a labor attorney about it. I was asking him about referring them to a tax attorney, and he said, "Oh no, at this point they need a criminal law attorney. They need a criminal defense attorney because otherwise they're all going to jail." You got to negotiate something out, and it's not good. You can't, when you deduct payroll taxes from somebody's check, you're holding that money in trust. It's like sales tax. You charge somebody sales tax, but it's even worse with the payroll taxes, or at least, anyhow. I think, if the business is making money, how much is it making? You've got to run the numbers on that. What are the payroll taxes? Why haven't they paid them? What did they pay for instead? Were they taking money out of the corporation to buy the Cadillac and to buy the house and to buy whatever instead of paying the expenses of the company? And if so, they've created it. They probably want to sell the corporation. That's not going to happen, especially if they have that kind of tax liability or tax issue. So any type of sale is going to need to be an asset purchase agreement so that all the liabilities remain with the seller. But where's the value? On the one hand, they're trying to say, hey, I have this great company that's making a lot of money and it's making so much I can't pay my taxes. Well, I mean, that doesn't really fly.
They are pulling out, in fairness to them, and I can't be too fair to them because of their issues, but they are, it's an sub S, right? So the company shows quite a bit of profit, and of course they've got personal tax liability out of a sub S, and they've just overspent. Looks to me like they're making money and profitable as a business. If they were able to get the owners out of there, and a new owner would come in there and just take over their business flow, I think they might be okay. Just they've overspent for the wrong things. To your point,
Well,
but I don't be liability either. I don't want to get into a situation where I'm aiding and abetting them in any way.
no,
They
you're
are,
not.
yeah, they are working it out with the state. They've got some payment terms, but it's really high. They can't do it. They don't have they just don't have enough money.
But you're saying the business is profitable, and yet they haven't paid the payroll expenses. So if you deduct the actual expenses that they haven't been paying, is it actually profitable?
Well, the tax returns say it is. The tax returns say they're making $180,000 or more, after expenses, and so the tax returns are pretty strong, and that includes the payroll taxes, deductions, and so forth. They don't show any real owner payments there because they leave that for what's left over, right? Their cash flow, and they just mismanage their checkbook as far as I can see.
So under an S corporation, the owners should be paying themselves on W-2. There should be some owner's compensation. They should have themselves on salary. I mean, how much are they each taking out of the company?
Very, very small. It's not a W-2. Well, they may have a W-2, but we're talking $10,000. That's nothing, really. So you can, you can add some of that back, but their house payment isn't really a legitimate, but they're taking that out. They're
paying the house payment through the business.
Yeah, they're taking the house payment out through the business. They've got 3 vans and a pickup, and it's a small company, right? They've got all sort. They take out at least $1,000 a month for personal expenses in addition to the house. They've got quite a few expenses that they are expensing through the company. Yeah. And so that's the way they're pulling their remuneration, their compensation. But to your point, they're not pulling the salary of W-2. That's the challenge here.
Yeah. So if they're showing 180,000 in profit, that's going to flow through to them on a K1, and they're going to end up paying income tax on that 180. But what they haven't paid is they haven't paid the associated payroll taxes that they should be paying if they were paying themselves on a W-2.
They've expensed it. They've expensed it, and they've expensed the B&O tax in Washington, which we can, I guess, adjust out for normalization because that would be similar to income tax in some other states, right? Not sales tax, but B&O tax. It's a different tax. But yeah, that's
well, you have when you do the recast, you have to do plus and minus, right? So you're going to add back things for, the mortgage interest, because the mortgage their mortgage interest is not a true business expense, right? Their mortgage payments. You're going to add back probably their personal vehicles if they have lease payments or whatever for the personal vehicle, you'll add those back. But you also have to subtract out the fact that they are, as an S corp, they should be paying themselves a salary. If they were paying themselves, a minimum of $4,000 or $5,000 a month for each of them, that would be, let's say, 60 grand to each of them. Then you have the associated payroll taxes for the FICA and all of that. Plus you have workers' comp that may need to be paid on that. And so you have to look at those additional expenses that they are not paying and subtract those out in order to normalize correctly.
Well, for instance, on the house payments, 5,000 a month, that's quite a bit. And they use it for their office. They use their garage for their storage. They have no office space other than their house. So you could maybe take 3,000 out of that, right? Because 2,000 ought to remain in there for someone to come in and rent an office space, right? So you could normalize that out, right? About 3,000 a month, let's say, and then other things. So a lot of us work out of our homes now, and so we do expense maybe a portion of our house back to the business, and that's legal.
Yep.
So trying to figure out how to sell this thing, and I'm not quite sure I want to, but
well, if you think that it's profitable, if it's a service company, they have recurring, do they have recurring contracts for servicing AC and all that?
They do. They don't have concentration accounts, I don't think. Maybe they have one concentration account that's more than 10% of their revenue, and that's kind of one that they get. But there's no contracts. It's not a service company where they're contracted to go out and keep things running, that type of thing. It's more.
So what do they do replacements or what are they warranty work?
New construction, retrofits, you name it, it's mostly in the residential side of things.
Yeah.
They've got 4 or 5 people working for them, and they've got business. They buy their supplies the day they need them, so they really don't have a bunch of supplies purchased or inventory.
Yeah.
It's a pretty slick operation if they could just keep the money going the right direction. But they've gotten themselves into trouble, and now they want to get out of Dodge. And so that's
I mean, yeah, they can sell the assets of the company provided they you gotta, do they have any SBA loans or anything like that? Any liens and encumbrances on the business?
Any SBA loans, just encumbrances on their vans, leases, and a note on their vans. And it's about a wash. In other words, if you pay off the loan, you may have some equity, maybe 1,000 equity on a 20,000 lease or purchase. So they don't have really much equity in anything that they're going to give. So the assets are just almost clearly goodwill.
Yeah.
It's 100% goodwill.
Well, do the recast, and there's a lot of HVAC companies out there that want to buy additional business, want to expand through acquisition. So, they may be, it's probably not going to be that tough to sell. The hardest part is going to be, what are the actual debts? And, I'm sure that IRS and the state government may have liens against the business at this point. So what are the liens against the business? If you can sell the business and get all the liens, for enough to pay off all the tax liens and everything else and get a commission out of it, then it may be worth doing, then that would let them walk away. Any debts that they have any other debts would stay with them. So, you just want to be careful that you don't sell the business but end up not getting paid because the tax liens and everything else are more than the purchase price, more than the sale price. In which case you've done all this work, but you fall behind. You're not you're not at the top of the list in terms of getting paid. So
yeah, we don't want to just do this for practice, and you're right.
Yeah.
So I think
Yeah.
The advice you've just given me, I'm going to take it. And that is to figure out, find the documents, see the liens, find out what that total is, and then go work backwards from that to find out if we can actually get paid.
Yeah.
Yeah.
You need to be able to sell the business for enough to make sure that you're going to get paid. Otherwise, it's not worth your time.
Is there any way to search tax liens?
Well, there is, because I know that in California, we just go Secretary of State, and we can search for UCC ones. Now that's at the state level. Tax liens are typically filed, I believe, at both the state and the county. So I would check with both, check the state
Or the
and the county.
UCC one route, that's probably the best idea.
Yeah. I mean, in a search in California, you can search them. You can search them free, and then if you want the actual documents, you just pay for the documents.
Okay.
And to file a UCC against them, is a whole nother story. But that's only like $5. You just have to make sure when you're searching, you want to search for their business name, their corporation name or LLC name, and any other names that they've done business under in the last, 3 years or so. And then also, I would search their individual names as well.
So they've switched from S corporation, or from an LLC to an S corporation. Does that ring any bells for you?
Not really.
Okay.
I mean, I don't know Washington law, so I know that there are certain types of businesses in California that cannot operate as LLCs. They have to, if they want a business entity, they have to operate as corporations. So, I don't know. There may be a legal reason for that, or they may have just felt that corporate law is more established than law for LLCs and the protections and so forth. So an attorney may have advised them to convert to an S corp. So I would just ask them, what was the purpose for converting?
Why they did it.
Yeah.
I just have a few questions I need to clear up, and okay. I don't want to take over your meeting.
No worries. Hey.
Got a